Hi guys. So I started the year by making a video in January recommending 23 top stocks to buy for 2023. I've been updating that list monthly by adding and removing stocks from that list. Today, I'm releasing an update, and for the first time in several months, I'm adding 3 new stocks to the list. I'm going to start by sharing my top 17 stocks to buy. The 3 new additions I'll share with you towards the end of the video. Now, I'm going to go through these quickly, but I have deeper analysis on each one of these videos on my channel, so feel free to dig through after you watch this video. Now, understandably, you're probably thinking why you should care about my stock picks. Now, I'm not going to bore you with the details of my thousands of hours of study to complete my master's degree in financial economics or to pass the thousands of hours of study to pass the CFA exam. But I will let you know that 14 out of my top 23 stocks to buy are up for the year, and 4 of them are up at least 50%. So without further ado, here are my top stocks to buy right now. And it starts with Alphabet, Visa, MasterCard, Microsoft, Target, Netflix, Starbucks, and PayPal. Now, what I have pulled up here is a chart of each of these stocks and their forward price to earnings ratio. This measures how expensive the stock is relative to its earnings. And if you look at this, the most expensive stock you see is Microsoft at a forward PE of 30. The cheapest stock is PayPal at a forward PE of 10.6. Now you'll see this in common with all of the stocks that I recommend is they are not expensive. I am not a fan of buying expensive stocks right now when the Federal Reserve is raising interest rates and trying to slow down economic activity to control inflation. The next group of stocks is Etsy, eBay, Salesforce, the Walt Disney Company, Airbnb, Home Depot, DocuSign, 3M, and Adobe. Now again, if you look at these forward price to earnings ratios of this next batch of stocks I just mentioned, you'll notice these 2 are not expensive, with the most expensive being a forward PE of 27 boasted by Airbnb and the cheapest of 9.594 with eBay trading at this relatively inexpensive price. Now, if we look further, I can show you the performance of all of these stocks that I have recommended. I'm not going to go through each one of these individually, but you can see Alphabet and Microsoft and Netflix are the top 3 in this batch of stocks, with being up 41, 39, and 28% respectively, with the worst one of these picks being PayPal, down 15% for the year. Now you'll notice that my top performers are up way more than how much my top loser is, with just 15% downside in PayPal's case. Now looking further into the other stocks that I've recommended, the top stock in this batch is Salesforce, which is up 62% for the year, and Airbnb, which is up 24.92%. And the worst performing stock in this batch is Etsy, which is down 28.59% for the year. I've recently revisited and reanalyzed Etsy stock, and I reiterated my recommendation that the stock is indeed still a buy for 2023, even though so far it's not having a very good year. Now, I mentioned earlier that I recommended 23 stocks to start the year. I've since taken 6 of those stocks off of my list, and those 6 are Domino's, Chegg, Mercado Libre, Palo Alto Networks, Nike, and Meta Platforms. A few of these stocks I took off the list because they had performed so well already. They had experienced such solid gains, and I recommended to take your profits and sell the stocks. That was Meta Platforms. When I recommended to sell Meta Platforms, it was already up 100% for the year. I said, you know what, that's plenty. Let's sell this stock and let's take our profits. Another interesting one was Chegg. I recommended investors sell Chegg stock. At that point, it was down like 10% for the year. The reason I recommended to sell Chegg stock was because how I expected ChatGPT to hurt Chegg's business. And fast forward a few months later in May, Chegg stock absolutely crashed. It's now down 63.6% on the year. But I told investors to sell this stock long before the big crash. I recommended this stock as a sell around February. Now that I've gone through all of the previous stocks that I've recommended, I will go through my newest 3 stocks to buy right now. And those 3 are Deere, StoneCo, and Caterpillar. Now I'll go through each of these individually briefly. StoneCo is a Brazilian company that's kind of a mix between PayPal and Shopify, and it's doing really well, and it's trading at a relatively inexpensive valuation of 13.33. This stock was trading at a forward PE of close to 30 earlier in 2022. You're now able to buy this at a relative bargain. The next stock is Caterpillar, trading at a forward PE of 11.65. Caterpillar is benefiting from several rounds of fiscal stimulus that's boosting construction spending worldwide. The company stands to benefit from that trend, and it's not expensive. Similarly, Deere is trading at a forward PE of 11.12. The company is also benefiting from several rounds of fiscal stimulus, and Deere also benefits from rising inflation because it works with farmers who buy its equipment, and these farmers are more interested in buying Deere's equipment when prices of commodities are higher. So all 3 of these companies are experiencing positive tailwinds and trading at relatively inexpensive valuations. For that reason, I'm adding these 3 stocks to my list of 17 to make a total of 20 top stocks to buy right now. All right, but that's all I've got for this video. Thank you so much for watching, and I hope I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.